The gold and silver markets continue to be under a ton of stress, and in this video I'm going to be explaining why that is, as well as some things for us to think about in terms of setups, ideas. Where's gold and silver heading next? This is a big question in markets. Amidst a really strong US dollar, we're seeing a lot of pressure on the metals market. And in this video, let's go through it. So here's the thing that I want to show you guys. First of all, let's just take a quick look at the damage. Silver has dropped down to $21.52 an ounce relative to the US dollar. And look at gold, guys. Gold is well beneath that 1850 mark that we thought maybe there'd be a little bit of a bounce. Nope. Gold is down to 1837 here on this Monday morning as dollar pressure continues to push it down. Now in this video, what we're going to do is we're going to take a little bit of a combined approach on both the technicals and the fundamentals of gold right now. So starting out, we'll do quick rundown on the fundamentals. What is actually driving gold's price lower? Fundamental analysis, a couple things that you need to consider. In terms of the first one, which is the US dollar, let's discuss this. The US dollar is so strong right now for a couple reasons. The US economy is still relatively strong. We saw an increase or a growth in the GDP number last week. We also saw relatively still elevated inflation in the US, which is continuing to keep which our next component here is the Fed, the Federal Reserve. It continues to still be likely to continue to keep those interest rates higher, but not necessarily just higher, but higher for a longer or sustained period of time. That sustained period of elevated interest rates is strengthening the US dollar and hurting the bullish case for gold, which continues to, again, weigh on the metal. So we have the US dollar strength, which is partially, we could also say this is also the economy looking relatively strong. We have low levels of unemployment out of the US, which this week we will get NFP, which is a pulse check on the jobs numbers here in the US. And then combine that, with the Fed, which has not seen evidence or data to really show disinflation is in full swing and still winning. We've now kind of reached this point where inflation seems to stubbornly want to stay where it's at. And so the Fed is wanting to keep those rates high, strengthening the US dollar. And again, because gold is quoted in dollars, a stronger dollar tends to put pressure on the metal. So that's a bit of the fundamentals. And now I'll give you guys a bit of the technical analysis on gold, and we'll also do this for silver. I want to look at this daily chart, but I want to scroll out and show you guys something. If you're someone who watches my content regularly, then you may know that recently we pointed out this major level of support around 1890. Previously, this level generally held pretty well. It held again, and then with this breakout, I alerted my audience, my followers here, that a concern here for me is that the 50% retracement, not the 50% retracement, this level of support here has now actually become a major level of resistance. And not only that, with the breakout of this level, if we look left, there's not really any clear signs of support on a technical basis. And I think that might be also why, with this floor being broken, price has kind of rapidly fallen down. And I do think that it is likely that we could see a move down to this 1810 mark, which is where I see the next area of possible support for the metal. Now, again, I want to make clear here, I mentioned this 50% retracement by mistake again a second ago. I am actually very interested in this 50% retracement. It is possible that before we get down to this area, we could see a little bit of a bounce on gold. Now, I'm not necessarily calling for that because, again, I don't see any major support in this area, but I do think that if price does retrace up into this area, in my personal opinion, the fundamentals and the technicals still look bearish, and there could be some opportunities to get on the short side, in my personal opinion, and that might be what I choose to do. Now, if we drop down to like the 4-hour chart, you can see even more clearly what's been going on. We had this big break, and with that candle closure underneath support, we saw a sustained push lower. Now, one thing you might argue, if you're more, looking for a closer or a first attempt, if you're very bearish on gold, there is an argument maybe to be made for like this 1875 mark, which lines up nicely with the 38.2% retracement on this fib that I've drawn, as well as past resistance here. So you can see price previously sold off yet again from this level and even retested it, selling off again. So what I want to point out is that if we do start to get a bounce for gold, the concern here is that fundamentals are very much stacked against the metal. And in both of these areas, I would generally be looking more for bearish price action to continue the move lower. That would be at least my take on the gold market at this time. Another thing that's really important is silver. Silver has fallen apart, guys. Silver has actually outperformed gold recently, but not so much right now. As you can see by my watch list over here, silver's down 2.85% at the time of recording, and gold is down 0.61%. So gold definitely having a little bit better off than silver today. A massive slide to the downside on silver here, and actually even breaking through 22.4, which was a massive area of support for the metal. So silver and gold both getting heavily beaten down by largely the same factors. There's another one though that I forgot to mention, and we've got to mention for gold and silver, and that is China. China seeing some economic slowdown. They've had sort of a different set of problems than us here in the US. China has seen very low levels of inflation, disinflation, and that's largely due to kind of the slowdown of their economy. Remember that inflation is the result of prices rising, prices going up, which is oftentimes due to a very strong economy. When you have a very weak economy, it can lead to levels of very low inflation, and in horrific states like 2008 can even lead to deflation, right? Negative inflation. So then why is that bad? Why are prices coming down bad? Well, it's not necessarily bad for somebody who's going to the store and purchasing something, but it's terrible as it can just slow down the whole economic system. Prices rising, as weird as it sounds, actually is a good thing for general economy, because again, it continues to show growth, and then when there is growth, it yields more growth, whereas a slowdown, a lockup of the whole system and money flow can be really negative. Anyways, silver, same thing here. A lot of those same factors. China, you have the Federal Reserve here staying hawkish, that dollar strength. All of those things also apply to silver. And silver, if you're a trader, is actually more volatile usually than gold. It moves percentage-wise more. So a lot of people don't trade silver. Everybody likes to trade gold. One thing to think about with silver is, again, you get that larger volatility swings, which can be great if you catch the right side of a trade. Obviously, the same applies if you're going long or short. It can be bad for you if you're on the wrong side of the trade, but regardless, I digress back to this concept here. This 38.2 to 50% zone looks really interesting. We have past support here, which now we have to probably draw as resistance. So if we draw this in and we make this our little pink-red color, this looks bearish. And again, we probably are due for a bit of a pullback, but if we do pull back, I think a lot of sellers are probably lined up to try and take this thing lower. So there's a couple things about that I'm paying attention to. I also want to show you guys something on the Smart Money Tracker. The Smart Money Tracker on our tool, our data here at A1 Trading, of course, we build software tools for traders. We had a huge demand from people to get better COT data, which is what you're looking at now. This is the product of about 1.5 years of development. Our software tool, the EDGEFINDER, allows traders to look at all sorts of data, as well as kind of our automated generated ideas, etc. Anyways, I wanted to show you guys specifically with the metals world. Let's go over here and let's just look at silver, and we'll look at gold, and we'll just let that come in. So here is gold and silver isolated in our data. What you'll see is that there's still a net long bias overall on net institutional positioning. But what I find a little bit bizarre is that we saw an increase in buying on silver in the most recent filing. This section down here refers to the latest COT filing from the non-commercials or large speculators. This is a report that's generated by the CFTC's Commitment of Traders. The Commitment of Traders data is generated by the CFTC. And one thing that you should know is that it is a little bit lagging. It's not a perfect indicator by any means, but it can give you an insight into where generally hedge funds, small banks, large institutional investors or traders are generally positioned week to week. And so what we can see here is that silver saw a bit of an increase in buying pressure, but gold, not so much. Actually, a pretty substantial short kind of week. There was, if we break down into its components, we can see There are more long contracts open than short contracts, but in the last week we saw a decrease in longs and we saw a large increase in shorts on the gold market. It's something to think about when you see these big swings in the COT data to pay attention to. Again, gold, the bigger of the two, larger marketplace by a landslide with gold. So I pay attention to this a little bit more. The metals market may be under stress due to this figure here, as institutional money seems to be net bearish in the latest filing. So again, when we go back to price action and we see this data confluence in multiple areas, right? I'm also getting bearish setups on gold here. You can see on our top setups, this is basically the result, the algorithm of our data, which takes into account tons of stuff like labor statistics, economic figures, inflation, and it scores it automatically with the macroeconomic algorithm behind the scenes. It scores all this stuff up, tallies it up, and gives us a bias. We've been bearish on gold for the last few weeks, and you can see it's played out really, really well. Gold has been a bearish call out from the EDGEFINDER. We can see it isolated there, and we continue to stay bearish. When I say we, there's a couple of us who design, build, manage the software that you guys are seeing. So that is what we do, like I said, at A1 Trading. If you guys would like a copy, by the way, you can find a copy of this software down below in the description. You can send us a direct message. When you click that link, when you direct message us there, it will take you to a place where you can actually get access to a live chat center. So check this out. When you click that link, it'll take you here. When you click the link, take you to a direct message center. Just click chat now, put in your name, and you can have a direct message conversation with someone on our staff. It is a real person that you'll be speaking with about the tool, and tell them you watched this far in the video. We're 11 minutes, almost 12 minutes into the video. If you made it this far, message us and we'll give you an extra discount because you are a subscriber, a viewer here on YouTube. We do genuinely appreciate our viewers, so please check that out down below in the description. Message us and we'll get you that copy for that subscriber discount. Just mention it. Somebody will help you out and tell you more info about it. Thank you guys very much for tuning into this video. I hope this was helpful to you in some ways, and we'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel, and we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.